Welcome, value hands, to the Daily Horizon View. The date is the 27th of 9th, 2019. It's a Friday. As always, we are taking a closer look at the ASX Exchange Traded Funds. This is my top 5's list. Today, our spotlight is on ZYAU, which is the ETF Securities S&P ASX 300 High Yield Plus ETF. Stick around for that one. Very interesting product. You get some valuable information out of that one as well. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay guys, let's take a look at the top 5 ETFs for percentage rises. For Friday, we saw ZYAU, ETPMPD, HEUR, GEAR, and finally here we saw ITW. ZYAU is the ETF Securities S&P ASX 300 High Yield Plus ETF. And that one has a portfolio of 40 stocks from the S&P ASX 300 with the highest shareholder yield, also defined by common dividends and common share buybacks the last year. That one has a market cap of roughly $143 million, dividend yield roughly 6%. I think that might have dropped off a bit since I updated these figures, but we'll double check that at the end in the spotlight. Morningstar, give it a neutral rating, which is a 2 out of 5 stars. Saw a percentage rise today of 2.43%, which equates to 28 cents on a volume of 35,500 shares. Slipping over now and having to take a closer look at the top 5 percentage falls here. QR, IKO, GDX, ETPMPT, no 5 spot here, MNRS. So QR is the ETF Securities S&P Biotech ETF, and that one tracks the S&P Biotechnology Select Industry Index, rough market cap of 5.8 million, dividend yield of roughly 2.4%. We've seen a drop today of 2.28%, which equates to $1.21 on a pretty lowish volume here of 962 shares traded. Okay, let's have a look at the top 5 ETFs for dollar rises here. ETPMPD in the number 1 slot, followed by SPY, BAP, A200, and ITW. For those that have forgotten, ETPMPD is the ETF Securities Physical Palladium ETF, which is backed by physically allocated metal held in the HSBC Bank in the United States of America. Rough market cap of about $2.3 million. That's a small ETF for sure. We saw a rise in the price for Friday of $4.41. Get my shit together on this one. 1.92% rise. Now we're on track again. Volume extremely low, 38 shares traded, not much to see there. Okay, let's cast our eye over the top 5 ETFs by dollar falls. ETPMPD, PT in the number 1 spot, IKO, IJR, IJH, and running at the top 5 we see QR. So ETPMPT is the ETF Securities Physical Platinum ETF, and that one is backed by physically allocated platinum held in the HSBC Bank in the US of A. Rough market cap of 5.8 million. When I checked it up last, we saw a fall in the share price of $2.43, which equates to $1.82%. If I can get my shit together on this one as well. Lowish volume. This is a small ETF. Low liquidity for this one. 150 shares traded. Top 5 number of trades. Let's look at the ETFs here. STW, VAS, VHY, VAP, and VGS. So Vanguard funds, all very popular in the list here. So STW, for those who have forgotten, is the State Street Spider S&P ASX 200 fund. That one is designed to provide low portfolio turnover, accurate index tracking, and that all should combine for low costs. So a low cost ETF, rough market cap of $3.7 billion, one of the bigger ETFs on the Australian market. Dividend yield pretty healthy, around the 4.3% mark. Morningstar give STW a rating of bronze, which, if you're thinking about that in a star 5 out of 5 stars type thing, that will be 3 out of 5 stars. So Morningstar bronze, 3 out of 5 stars. Today we saw a fall in the share price of 3 cents, which equates to 0.05% on a pretty healthy number of trades of 565, so almost double VAS. Top 5 for volume. Let's have a look at that. IOZ, which is quite a popular ETF. STW, VHY, BNKS, and VAS. IOZ, for those who have forgotten, is the iShares Core S&P ASX 200 index. Tracks the performance of the top 200 largest companies listed on the Australian Stock Exchange. Rough market cap of 1.5 billion or thereabouts. Pretty healthy dividend yield because you're tracking the ASX 200 of 4.89%. Morningstar give this one a rating of bronze, so equal to STW. So IOZ today, we saw a pretty healthy volume here of 368,300 shares traded. On the upside, because we saw a rise in the share price of 19 cents, which equates to a rise in the share price of 0.69%. Top 5 ETFs by value traded today. IOZ, VHY, STW, VAS, and VAP, so no big surprises here. On the value front, we've almost got a dead heat between the 3 top ETFs, which is quite interesting. So IOZ, we saw a value today of $10.2 million traded. Pretty slow day looking at the volumes and the values here. As we mentioned, IOZ was on the upside because we saw a rise in the share price of 19 cents or 0.69%. Yeah, $10.2 million, which is really on the low side. But yeah, a 3-way heat, which is interesting. Almost a 3-way dead heat, I should say, which is quite interesting. Okay, let's dive into our spotlight, which is ZYAU. That is the ETF Securities S&P ASX 300 High Yield Plus ETF. Investment objective, it's pretty standard. So ZYAU aims to provide investors with a return that tracks the performance of the ASX 300 shareholders yield index by holding all of the shares that make up the index closely in proportion with their index weightings. So the S&P ASX 300 shareholder yield index offers exposure to the 40 stocks from the ASX 300 index with the highest shareholder yields. So why on earth would we be bothered investing in this? Dividends are the dominant form of corporate distribution. By including share buybacks, it gives a more complete picture of shareholder yield. So The premise being that fewer shares on the market. So if the company's buying back its shares, you're looking at an increase in the share price. So that's part of the yield. So fewer shares on issue, higher dividends for those shares as well. Filtering for free cash flow to equity removes companies that pay out unsustainable high dividends, thus focusing just on those quality companies that are going to give you long-term growth and be around for the future. ZYAU follows a unique selection methodology, which results in the portfolio looking quite different from other high-yield ETFs available in the market. We'll touch on this a little bit further in the next slide in my little conclusion anyway. Okey-dokey, so we've got a net asset value of $11.50, closed just above that at the end of Friday at $11.80. Market capitalization of $143,200,000. Reasonable management costs of 0.35%. I like this one. You're going to get a quarterly dividend yield. January, April, July, October, you want regular money going into your pocket. Dividend yields a little bit lower. I just double checked it. It's 5.19%, and I kind of mentioned before, so just be aware of that. Just above 5 at the moment, just depending on the fluctuation of the quarter and the share price. For companies to be eligible for the index, they must have free cash flow in excess of the amount returned to investors and must have a non-negative dividend per share growth. They must also have an average daily trading volume of $1 million over the past 12 months. So they're looking for companies with liquidity. So you don't want to get stuck in any of these things because they're at the smaller end of the ASX 300. So you want to be cycling in and out as required. The index is weighted by a measure combining both market capitalization and shareholder yield. So they want companies that have a big enough market cap and also the good yield. So trying to find a combination of those positive factors. So it may not be obvious, but ZYAU is quite a concentrated fund or an ETF. You're looking at the top 5 taking up 46.2% of the portfolio. Concentration can create volatility in returns and potentially high risk, when compared to a larger, more diversified fund. However, concentration is not necessarily a negative thing. If the investor has a longer term investment horizon, typically if you are widely diversified, you can only ever expect the average. So so if the average market return over the last 30 years has been 9%, you hope to get that 9% for the coming 30 years or 40 years or whatever it is on average. But I think if there are potential to outperform the market when you've got a higher, better selected portfolio, a smaller portfolio, that there's actually potential for outperformance. But having said that, as I just mentioned, with a more concentrated portfolio, there will be times where you are susceptible to greater falls in the value of that share price, just for the fact that it is more concentrated. Having said all that, as we always talk about, we want to be doing our research. So check out EX20. That's another interesting take on the ASX top 200 type fund. So that one will give you the index minus the top 20 companies. Check out A200, which is one I like, and also VAS is a good option. That'll give you the ASX 300. Flick over and have a look at the chart. Once I flick through all this stuff, because I forgot to do it. So we'll have a quick look here and sort of just reinforce what I mentioned before about the concentration. I mean, to me, it's not that much of an issue, but then again, I invest for the long term. I don't particularly buy in and buy out of a lot of things constantly. I mean, I personally, in my own portfolio, own 2 of the top 10 you're looking at here. So I own Westpac and I also own Horizon Holdings. I used to own ANZ as well. Never owned Macquarie, never owned Transurban. I owned Ascenders for a short amount of time. Never owned South 32. Sydney Airport's never owned, but they're not a bad infrastructure play. Suncorp, Stockland. So I think there's definitely some high quality companies in that top 10. 40, as mentioned, that's sort of 46% of your total holdings. Performance has been pretty good. So since inception, you're looking at 19.14%. Only marginally behind the return on the benchmark index, obviously because of the fees that come out of that. Small tracking error, I should say. So, the last 3 years have been pretty good, and you've picked up quite a bit in the last 12 months as well. So overall, I think it's actually an interesting fund. It's been running since 2015 from memory, so sort of 3.5, verging on 4 years. So I think it's one to actually have a look at. And if you're looking at an alternative and looking at things in a bit different way, this might be something that's actually of interest. I mean, it's got kind of like a neutral rating, but I think it's actually one that's worth a closer look for those guys looking for something a little bit different. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.